What's up, guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. And then also JPMorgan Chase is buying over $1 billion with this other company called Haven Realty to build $1 billion worth of real estate in Atlanta, Georgia. Like, what are they thinking? This doesn't even make any sense. Like, how can a bank be possibly, like, how are they allowed to do this? Let's go ahead and see. Is it a bad thing? Is this BTR like really, really a bad thing? Or is it okay? And I'll tell you exactly why they're doing it, what's the purpose behind it, all that stuff. But mortgage rates, I know I haven't done this in a while. You know, we're trying to figure some things out. I'm working on a few other things. You know, life happens. You got to go on, but we're going to keep on with this mortgage rate update. Let's go on with 10 products. 30-year fix will be sitting at 5.78%. 15-year fix will be sitting at 5.15%. 30-year high balance will be sitting at 5.76%. DSCR loan, which is a debt service cover ratio. This is one of those loan products that doesn't require any down payment. It doesn't require, it does require down payment, but it doesn't require like a credit score. Really doesn't really require it, but it's always good to have a better one. You always get prime. But majority of this is if you have a rental property that you want to go and invest in, right? You want to dabble into the investment world of things, which this is actually not a product that you want to get into right away unless your income that you have does not qualify you on the Fannie Mae or Freddie Mac products. But what this is it qualifies you based off of the total income that is coming from that property to cover the total debt that it's going out, which is your mortgage, principal, interest, taxes, insurance, and other running costs that you might have. Now that'll be sitting at 8.50%. Bank statement loan will be sitting at 8.50%. FHA 30-year fix will be sitting at 5.3%. 7.6 adjustable rate mortgage will be sitting at 6.14%. USDA 30-year fix will be sitting at 5.35%. VA will be sitting at 5.73%, and then hard money fix and flip will be sitting at 9.75%. Now, those are going to be your mortgage rate update. If you were interested in any one of those mortgage products, I am a mortgage broker. I got those two guys right there. I own those sons of guns. But link in the description below. DM me, call me, send a pigeon. I don't care what you do. Let me at least try to beat your big bank. Try to get you some money. Try to get you something to. The grand scheme of things, that's what this whole channel is about, is to go ahead and see how much money we can go ahead and save you and promote the products that we're going to go ahead and do. But 50% commission rebate, 0% listing on selling your current home, and any other mortgage products, link in the description below. But JPMorgan Chase, so what they're doing in the world of real estate, there's something that an acronym that's called BTR, okay? Buy to rent. So what you're doing is you're just pretty much either A, you're developing just to rent only, like apartment complexes or apartment complexes. Majority of time, now this is a weird thing that's been happening over the last couple of years, is that majority of these REITs, which is a real estate investment trust or any other type of trust, any type of syndication that you have when it comes to real estate, they are buying up single family homes. Now, JPMorgan Chase is getting their beak wet in this whole entire single family home purchase. Now, why would you go ahead and get yourself into the single family home purchase? It doesn't make sense. First of all, you're a depository institution, which you're playing with other people's money, which should not be allowed at all. Number two, how is it a company like JPMorgan Chase is allowed to go ahead and go into business with a company that, let's just be honest, okay? Haven Realty in the world of real estate investment and developing, they're really a nobody. Now, they have a portfolio of $1.2 billion, which is not that much, to be honest with you. In the world of real estate, that's like pennies on the dollar. Now, just to give you an idea, now JPMorgan Chase is one of the 3 biggest depository banks here in the United States. They're massive, they're huge. Why would you go into business with such a small little investment trust? Now, look, the biggest one, just to give you like a comparison, you have Annaly Capital Management. They have $73 billion worth of real estate. AGNC Investment Corp, they have $61 billion. Prologis, $59 million. American Tower Corporation, $58 million. Haven Realty is not even like on the list of companies that you would go ahead and use. It doesn't make any sense. Why would such a big depository institution go ahead and partner up with this company? Now, the homes that they're going to be building, homes that they're going to be building is going to be in Atlanta, Georgia. That's going to be, I guess, their pilot things. And you're saying, okay, $1 billion, that seems like a lot of money. Now, the reason why this is really, really bad is because whenever you are dabbling into the world of developing and real estate, and then you're doing this BTR, which you're buying just to hold and then rent when you get into the investment world of things, which, yes, I understand JPMorgan Chase has an investment side of things too. But you are supposed to be investing into other companies using other people's money with their knowledge. Now, when you have money that's coming in that you are lending out leveraged, that means that for every $1 that you go ahead and deposit, like let's say, for instance, I have an account with JPMorgan Chase. I deposit $1 into their account. They're allowed to go ahead and multiply that by 8 and then go ahead and lend that out. Now, when you're dealing with people's money, you're dealing with real estate. Real estate is not one of those things that stays static. It drops and it goes up. That means that the whole entire portfolio that you're holding is not that it could be detrimental to the whole to the company as a whole. Now, let's say Haven Realty, they go ahead and they decide that they're going to be, something happens with Haven, right? Something, I don't know what happens. They're not a big company. Something, it's a small company. Maybe they have some liability things. Real estate companies get sued all the time, especially when you get to that holding of $1 billion plus. What happens if something happens to that company? Does JPMorgan Chase hold the bag with them? Are they going to go into the shit with them if Haven Realty goes? That's why whenever you have big companies like this, it has to be all encumbering to the whole entire, to the umbrella of JPMorgan Chase. Like, I don't know exactly how the deal worked, but I am going to assume logically that since Haven Realty already has $1 billion, you're going to go ahead and jump on board with them. They're going to go ahead and just keep on their merry way. They're not going to go ahead and say, okay, you know what, JPMorgan Chase, you know what, now I'm going to go ahead and work for you. No, they're going to be in their own merry way. If something happens, boom, we're going to go ahead and split. Now, everybody saw a lot of bad things when it comes to acquiring certain things, right? Especially when you come to things of this nature, like Bank of America had the whole countrywide fiasco that they had going in. It was a bad business idea. Now, what happens if real estate goes ahead and drops? That is a huge question to ask, because then what you're doing is you're putting all your holders, everybody that you have into that company, even the people that are holding the money into those accounts, they're in detriment. Now, $1 billion in the grand scheme of things is like a drop in the bucket, okay? It's not a lot of money at all when you're trying to go ahead and buy to rent. In the real estate world, as you saw the numbers, $78 to $100 billion worth of real estate holdings. There's other management companies that hold way, way more. Like here in California, in Southern California, Orange County, there's a company called Irvine Company. They hold way more than $1 billion worth of real estate. I'm going to assume that they're somewhere in, a couple of $100 billion worth of holding. Now the difference is that they only do apartments. Companies that only do apartments are much different. They hold way, way, way more. Now, this whole world that we got into where people, these investment trusts, these funds, all these people, they're dabbling into the world of real estate. This is going to be, especially in the single family holding world, what's going to happen in Atlanta, Georgia is when they go ahead and buy $1 billion worth of real estate, that is going to be an influx. Well, people in Atlanta are going to be really happy because your property values are going to increase. The surrounding areas might decrease. But what is that really, really going to do? And then who's going to be the total overall management company that's going to go ahead and oversee all of this? Is it going to be this company? And what if they mess up? What are you going to do, JPMorgan Chase? What are you going to do? Now, for the greater good of conversation, it is not a bad thing for companies to go ahead and buy, hold, rent. It's as long as capitalism is going to rear its ugly head into our world, which I am one of those guys. we're gonna do this. We're gonna go ahead and buy, hold, rent, buy, hold, rent, buy, hold, rent. There's courses based off of it. One of the most biggest public figures, Grant Cardone, he does this. He buys and he holds and he rents. This is a great way to go ahead and build an investment trust. Now the problem is should banks be allowed to go ahead and get into this business? And if so, when does it stop? When do you allow it to not happen anymore? When do you consider this a monopoly? Because then what's going to happen is when JPMorgan Chase gets along, then go ahead. The coattails are going to be right behind them with Wells Fargo that's going to try to dabble into this, where Bank of America and whatever other bank you want to go ahead or credit union you want to go ahead and deal with, they're going to go ahead and dabble into this too. Which then, for the bigger part of it, is what if they do a bump and sell? So that what that means is like you go ahead and you buy, and then what happens if your portfolio starts not looking too great? Do you start dumping? Then what happens in the real estate market, especially when it comes to single family homes, then what's going to happen to the property values around it? Like, you can't have that much power over the surrounding areas whenever you're dealing with things like this. Let me know what you think. Is this a good thing? Am I missing something? Am I just being stupid about this? Because I honestly, I don't see a good thing coming from this in the long run of things. $1 billion here, let's say it holds. They're actually doing a little bit better than $1 billion here, $1 billion there. Now you saw the company's $73 billion. That's a big holding for a single family investment company or real estate investment trust holding these companies. They're only 70 times away from doing this. Now, a lot of people are like, oh, 70 times is a lot of times. No, it's not. It is not a lot. If you have $1 billion, I could probably do $1 billion. I could turn $1 billion into $70 billion in probably like 2 years. It doesn't take that long to go ahead and buy and build, because then what you're doing is you're creating assets on your book as long as the real estate market holds. Now, as everybody knows, the real estate market hasn't been holding. Everything has been going kind of crappy. Everything is just going to shit. Real estate sales, everybody is holding off, waiting for property values to go down, which they have. At least here in California, they have Boise, Idaho. They're feeling it too. Well, if you like the content, please consider liking, subscribing, commenting, all that other stuff. Tell me how smart or stupid or whatever. I'm just curious to see what you guys think will be the final outcome of this. Is this a good thing? Should JPMorgan Chase be allowed to dabble into this? Should they be allowed to go ahead and work side by side with a real estate company? I don't think that you should be able to. I don't see, when you're dealing with that much capital in certain companies, and especially since it's not your money, it's other people's money that you're dealing with, should you be allowed? I don't know. Appreciate you guys watching. Till next video, guys. Peace.